Bank reconciliation statement is a statement that is prepared by the account holder on a particular date to reconcile the balance as per the cash book with the balance as per the bank statement that is given or issued by the bank to the account holder. The difference between the two records can be due to the timing in recording the entries or a time gap in recording the transaction in cash book and getting recorded by the bank, or it can be due to the transactions that are getting recorded by the bank but which are not known to the account holder. Let's say if I have issued a check to another party for making the payment. The moment I issue the check, I make an entry in my cash book and reduce the money of 5,000 in my cash book. But the party to whom I have issued the check has still not presented that to the bank for payment. To that extent, my cash book gets understated. Therefore, to match it with the bank, I need to add 5,000 back in my cash book. If bank credit interest at the end of financial year 31st March 2025, then it will be getting recorded in my bank statement, but I'll get to know about that money or interest when I get the bank statement from the bank. Therefore, to that extent, my bank statement is overstated or my cash book gets understated. To match it with the bank, I again need to add 6,000 and this gives me a total of 1,91,000. If I get a check from another party, for example, if I have sold some property and I get a check, I get the check, I go in the bank and I deposit it. I come home happily and I recorded that money in my cash records. But until the bank has collected that money, my bank account is still not having that balance of 3,000. Therefore, to that extent, my cash book gets overstated. To match it with the bank, I will reduce 3,000 from my cash book. If bank has charged certain charges at the end of financial year, bank records those charges in the bank. But again, I'll get to know about those charges when I'll get to see my bank statement. Therefore, my cash book is overstated. To match it with the bank, I will reduce 2,400 from my cash book and this gives me the balance of 1,85,600 which is as per the bank statement. So I can start the reconciliation from bank to cash or I can do from cash statement to bank statement. But the logic to reconcile still remains that by looking at each and individual transaction, I need to see whether that transaction has understated or overstated which of my two records and accordingly I can adjust that in my books.